What happens next could shock everybody. And there's 6.15 trillion reasons why we want to pay attention. So I'm pointing to something here, but there's actually more at play. Why? Well, because if you look to the NASDAQ here, we form a marginally higher high, which actually means that we're going to be getting not only a weekly higher high for 3 in a row, a higher low, but we're also closing over that previous candle high. That is so, so important. But if we look here to the S&P, we're now going to actually be getting 3 of each as well, but we're actually also forming a failed breakout this week. The reason why this is particularly important for me is because if we look here a little bit closer, we note that the size of this bar is getting really small. I went over this on the pre-market show, but basically, this is where support was as we were going higher. But every single week, if we're forming higher lows, the support gets ratcheted up. And now look and see what we have to do for next week. It's like we can't really afford to go down at all. So yes, it is great that we have more higher lows and more higher highs right now. That's 3. But this failed breakout is 100% a concern for me. So what could happen next could shock everybody, right? Great video title, but here you go. Is the NASDAQ going to become the leader again? Because we saw a big move on chips, AI, and tech this week. While the S&P is starting to sag a little bit. And as we approach the end of the third quarter, going into the fourth, there's going to be some rebalancing. Some happen today, and there's going to be more tomorrow. So 6.15 trillion reasons why this matters. Last week, and again, now we'll get to the chase. All right. Without wasting your time, last week we saw $20 billion come out of the money market funds. Still, I was actually sitting here at 6.3 trillion. Oh my God, even bigger than what I thought. Oopsies. So this really matters because if more of this money keeps coming out, it means it's going to find a new home. And that's probably going to be in stocks. So if we're going to keep going higher, well, there's 6 trillion reasons why. But the flip side of this is that this money is in money market funds for a reason. It's scared, right? Is it smart? Is it scared? It doesn't really matter. But they've chosen not to buy stocks for a reason. Okay, but now we got greed. Yes. So this is the perfect time for people to come in and buy if they're getting FOMO, pop, flag, pop. And we keep forming higher highs. So it makes it look similar to this time over here, or maybe even here, right? Pop, flag, pop. So are we going to go into extreme greed? Are these people going to take their hard-earned dollars and put them into the stock market? Well, over in China, that's exactly what's happening. And they're taking even more steps today. So, right, huge moves on China this week. Oh, my goodness. People are looking for new homes for their dollars. And China, FXI, is up by 18.5% this week. I was watching this inverse head and shoulders, but of course, I did not buy. And now we're right here at a key pivot for the 200 weekly and our key relative low. So what this really means is that people are finding more places or homes for their money. Look at this breakout here on EEM or emerging markets. Higher highs, higher lows, pointing up. And this one's up 6.6% on the week. Incredible. Oh, yeah, I forgot to say I was going to give you 5 hot tips at the end of the show. So I'm going to probably get to those in a minute here. But first, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. So what I really want to get at here is just what are we doing as we get prepared for next week? Well, next week, we got some important data, right? The economic data, as Jerome Powell would say. This week, we saw a lot of really good data. Again, good is good. So if you see green, the main stock should be happy. And they were. Jerome Powell was bullish. And everything we want here came in line. Inflation did go up a little bit, but I think the market's more focused on jobs right now. So this is why going into next week, it's going to be really important. On Friday, we got the big one, right? It's like the Super Bowl. We're going to have average hourly earnings, non-farm payroll, and unemployment. That's what's really going to drive stocks here. So if we think about this, if now support is now ratcheted higher, as I just showed you, it went from being here for the higher low, now to here, and now basically we have to maintain blue sky territories. Remember, we also talked about how this was like a beach ball breaking out of the water. So it broke out. If it's going to stay above the water, we cannot afford to fall back below the pink line or our previous all-time high. That's the pivot, right? For the win to continue, we need to maintain higher lows and higher highs. And this is where there's a bit of a wrinkle in the fold today. The NASDAQ has formed lower highs, right? Lower low, sorry. And today, another lower low. So we got 2 full candles in a row. We know gap ups are for selling, and that's exactly what happened at the gap over here. So the NASDAQ, again, looking at different charts, the weekly or the daily, you get a bit of a mixed picture. Here's where I don't get a mixed picture though. When I look at the S&P as we continue to go higher, full candles in a row. That's 3. What do we have here? Full. So 6 out of the last 9 candles are showing that we're actually closing lower than we opened. And this is not always on gap ups. We're just weak, right? So the market is getting weaker and weaker. And then the final thing I'll just point out here is that the volume's been dropping off. So we're still forming higher lows. Like, what am I going to say? The chart doesn't look bullish. The one time we formed a lower low, recently turned into a bullish engulfing candle, a failed breakdown. The bulls won. However, are they going to be able to continue this angle of ascent, which basically means we cannot afford to go down next week. We have to maintain 568. And with that failed breakout here in the weekly on Monday, are we going to hold 565? I think so. But then what happens going into the month of October? All right, let's get to those hot tips, because next week we got some big numbers going into Friday, but that's going to be after the month of September is already closed, going into October. So what I'll do first is just remind you that I've been mentioning this stock on the streams in the morning for quite some time, mentioned it at 1.1. It's up by about 55% in the last month. So quite like that one. We also talked about Under Armour here. So this one's up about 15% in the last week. I'll tell you the reason why I liked it. I talked about the gap fill here, and then I talked about how we were back testing a golden cross. Well, I didn't quite get my buy on Under Armour, but I'll still plug that one there. I like it for the long term, and I've been in it for a while. It's finally starting to do something. We talked about Pfizer and the reasons why we like this one. I think it could go up. So stay tuned till the very end if you want to see the video for that. And then finally, CVS. So I've given you 4 tips so far. Here's the 5th one. It's Pepsi. Here's the trade. Pause it right now if you want. There's the target. There's the stop. It's a 4-to-1 risk reward. So with that said, click the video on the left if you want to watch more. If not, come hang out with me at 9:15 a.m. on Monday. Thanks so much.